We welcome you to our classes conducted by our YouTube channel SL Account School. Today's topic is inventory. Inventory is the raw materials used to produce goods as well as the goods that are available for sale. While raw materials, work in progress, and finished goods are used for manufacturing businesses, for merchandising business it will be only stock in trade. Balances of these accounts will be treated as current assets. What is stock adjustments? Opening stock and purchases are written off to a trading account on the assumption they would have been sold during the year in full. If any portion of such item remains unsold at the end of the accounting period, that portion would be an asset and that should be therefore transferred from expenditure account to an asset account, which is called stock in trade account. In practice, remaining quantities are determined by physical count or stock taking. Various methods of calculations are made to get at the valuation of stock. However, irrespective of the methods used, as per prudence concept, the stock will be shown at cost or market value, whichever is lower. Let's look at few methods of inventory calculations. FIFO or first in first out method is one of the commonest method where the sales are from the opening stock and first purchases. The stock will be the latest purchase. Next method is LIFO or last in first out, where sales are from the latest purchases, stock is from the earliest purchases. Simple average method, different prices are totaled and average is calculated. With that, the quantities are multiplied for the stock valuation. Weighted average method, where total cost of the purchases will be divided by the remaining quantities, and this process will be repeated after every purchases. Standard cost, mostly used for manufacturing concern. Despite the actual calculation of the cost, they maintain a standard cost. Difference is adjusted as under or over absorption. Under adjusted selling price, the gross profit will be a fixed amount which will be worked backward from the selling price, and the stock valuation is made accordingly. Students should know these are only different methods of valuations, but accounting entries are standard and the same. Those three journal entries given are mostly used for manufacturing concern, whereas the fourth one is for trading or merchandising businesses. Now let's move on to some questions. The business sells goods at a uniform gross profit margin of 30% on selling price. The following informations are given. Revenue is given, opening inventory, purchases. What is the value of closing entry? Opening entry 10,000, purchases 45,000, revenue is 62,000 converted into cost of sales, which is 43,400. Therefore, the closing inventory is 11,600. The answer is B. The next MCQ, you note, purchases are made at different prices and the number of units sold is 500. Asked to calculate the gross profit as using FIFO method. Sales 500 units sold at 550, 275,000. This 500 was got from the 1st April stock 200, on 1st September stock 300 at 250 and 200 respectively, giving a cost of sale of 110,000. Therefore, the gross profit is 165,000. The answer is D. The next MCQ, Trisha has not kept accurate accounting records during the financial year. She had an opening inventory of 6,700, purchased goods costing 84,000 during the year. At the year end, she had 5,400 left in the inventory. All sales are made at a markup of cost of 20%. Here again, they want us to calculate the profit by adding the purchases to opening inventory and deducting the closing inventory. Cost of sales is arrived at. It's a GP ratio of 20 is calculated. The answer is 17,060 is B. In the next MCQ, instead of asking us to calculate gross profit, they want the closing stock. Total quantities sold are 400 plus 250, 650. All came from opening stock, leaving a balance of 50, which was multiplied by 190. Rest as per the purchasers' prices, giving us a balance of 188,500. The answer is A. The next question, raw materials are purchased and issued to production on the first in first stock basis. 2 stocks at different prices, 3 batches of purchases, 2 batches of sales. Sales prices are not relevant to us as they ask only the cost of material used for production. Issues to production 2000 units. Out of that, first and the next 300 all from stock, 500 from the first batch, 1000 from the second batch, the balance 200 is from the third batch, giving us a total value of 50,000 for the issues. The answer is B. The next MCQ, how should the loss of stock value of 15,000 caused by flooding in the company's warehouse be accounted for? Journal entry A says profit and loss account credit, which is an indication of profit, which is not the case. Therefore, this is incorrect. In C and D, 15,000 is correctly removed from trading account but debited to wrong accounts, drawings and stock. Therefore, the correct answer is B, where the loss will be written off in profit and loss account, removing from trading account. Last question is, stock movements of product X during the first quarter were as follows. January, there is a purchases. February, there is a sales. March, purchases and a sales. There is also an opening stock. They wanted us to calculate the gross profit using weighted average. In weighted average, with the event of every purchases, if the values are different, it will vary. Cost of sales would be calculated at the prevailing average valuation. Look at this working. Opening stock was at an average price of 15. Of 10 units made at 19.8, giving a balance of 198. Total historical cost at that point is 288 divided by quantity 16 gives us a new average price of 18. Since a sales was made at that point, that average price is used, giving a cost of sale of 180, thereby giving a gross profit of 120. When a new purchase is made, there will be a historical cost of 598 divided by then prevail quantity 26, giving a new average price of 23. Second sale was made at that point using the same average of 23, therefore of sale of 150, giving us a gross profit of 35. Dear students, we recommend more and more exercise like this to get better understanding of the subject. As you all know, these classes are provided to you by our YouTube channel SL Account School. We kindly request you to subscribe, share, like, and promote it among those who are interested. Thank you very much.